All right, what's up, Mortgage Coach and Trust Engine community? This is the first podcast I've done in 25. It is Monday, 1/6. Probably get this on social within a couple days, so think of the first week. Alec Hanson, what's up, buddy?
Good to see you, dude.
Yeah, it's good to see you in person here in Orange County. Dude, how far is your work from here? loanDepot headquarters?
Like 20 minutes.
20 minutes?
Yeah.
Yeah, so we are doing it in person. I think this is the second time we did one in person.
I know. I think we were in the backyard. Yeah, this is great, dude. This is my favorite.
Yeah. So, want to talk about top opportunities to thrive in 25. I'm doing a whole playlist on this. I actually interviewed Kevin Perenio, KP.
Yeah, he's a man. Lives on my street.
I know.
Yeah.
I know. His neighbor. A couple weeks ago, after I posted that, Sarah Middleton texted me and like, I got to move to Orange County, and I'm like, come on out here.
All the cool kids hang
Yeah,
out.
we need to get more people out here. So we're going to talk about that. Now, I watched a podcast you did a couple weeks ago with Shane Stanton, the Senior Vice President.
Yeah.
Why don't you just, because first of all, it was a great conversation. I would love to see more mortgage executives having that kind of conversation. Lots of transparency, lots of strategy. Why don't you kind of share some of your takeaways from that conversation, some of the things that you're focusing on at loanDepot as the Chief Marketing Officer?
Well, the funniest part about that whole thing was similar to what you're doing and what we're kind of doing now is just this concept of live content. So we just went live, and Shane actually called me out and was like, I had gotten out of that fast practice because just getting the routines of work and life, and there is something really nice about having a live conversation where people can watch it unscripted.
Right.
And unedited, which is how you produce content.
This will not be edited.
Not edited. And so that was the start of this, was like, hey, we need to get live more and talk. And as we were talking, the natural conversations of just what we're dealing with in the mortgage industry. 2024 was a gigantic roller coaster, a lot of head fakes, a lot of pump fakes. 2025 looks to be a lot of like similar uncertainty as we kind of find a new presidential like situation and all, like there's still a lot of unknowns with how this is going to happen. I mean, I saw an article today on the privatization of Fannie and Freddie again. Like that's coming up.
That's a new topic.
So I think that one of the most impactful things that people can do today, whether you're in sales or leadership, is to get vulnerable and get in front of people more often. And I think that core key is going to be one of the things that many people face this year is how often are you out in front of people that you want to make an impact with? And that's what really started us off to get on together and get live.
And especially if you're watching this and you are a local referral-based mortgage professional, that's one of your key assets is being local and connecting with people. Let's talk about that because at loanDepot, you've got a pretty unique model. You're one of the nation's largest lenders. You've got a consumer direct group.
Yeah.
You've got a portfolio.
Yeah.
You've also got a distributed retail of local referral-based loan officers.
And a JV channel. Yeah, absolutely.
JV channel. How do you see that playing out over the next 5 years at loanDepot?
It's an interesting bet. Most companies I know didn't or don't create a direct-to-consumer and an in-market channel. I mean, not at scale. Some have their feet into different places, but you look at some of the main competitors, they've chosen to have a exclusive direct-to-consumer channel and then a broker outlet.
Right.
Or they've tended to be just in the market, localized professionals, and they've tried to set up call center business direct-to-consumer and either struggled or have a micro little group that's not as scaled up yet. Because all those things have massively different levels of sophistication. And then JV is a whole other animal. I think that...
By the way, when you say JV, you're talking about JVs with real estate platforms.
Yeah, I mean, 85 to 90% of our joint venture platform are with home builders.
Okay, builders.
So we have some real estate ones, but they tend to...
But primarily builders.
That could be another podcast on like JV, realtors.
Well, and you guys are one of the top JV, maybe the biggest builder
we're
JV
really
platform.
good at it. So I think that how these things evolve, though, how these channels evolve and their success and failure is really going to be based on consumer behavior and how consumers change how they operate. And that's going to be a really fascinating world today because I came from, as you know, a direct, like in the street originator. Like weekends, open houses, door to door, calling realtors, kissing babies, and had no real direct consumer experience for the first 15 years of my career. And I always thought of them as a threat or a different angle, kind of come after my business. And now that I've worked at loanDepot for such a long time and I've watched everything happen, it's not who's worse or better, it's what does the consumer want and how's their behavior acting and what are they doing that's affecting the success of these channels. And so, for example, I have seen direct-to-consumer channels struggle with purchase business and being available on weekends and nights knowing
And
the
just
local
the
market.
complexity
It is. It's really
of
hard.
our purchase.
Look, you don't know the bond market in New Jersey. Like, it's
Right.
hard to do that.
Right.
And I've also seen localized loan officers massively struggle with getting digital and meeting their consumers digitally.
Right.
And so that's been a huge barricade for them of their success. Is they're not understanding the modern consumer mindset. They're 100% focused on their realtor partners, which is super crucial. So don't twist my words. Like, that's massively important. And they got to figure out how to become digital and represent themselves and build a brand and all that fun stuff too, if they want to reach the levels of success they're capable of.
So let's over the course of this conversation unpack some big opportunities, and let's stay focused on how do we unpack opportunities for the local referral based modern advisor that needs to have that omni-channel experience. They need to be digital. They need to be in person.
Yeah.
So as I think of all the opportunities, I truly believe that the mortgage professional that can optimize their own database, like get on the offense. Like, stop waiting for people to call you and tell you what they need.
I have such a great example of that. Can I tell you a story?
Bring it.
So everyone remembers the 45-day refi window we had in 2024.
Right.
It was like the smallest window ever, and our best originator, the guy that like Barrett Ketchian, who I just look up to, and has achieved heights that I never had in my personal
Say his
career.
name one more time.
Barrett Ketchian.
Barrett.
Unbelievable master of the trade. In that window, I think he locked like 65 deals. And I know originators that locked 0 deals in that window. And when I started to talk to him about, like, hey,
and took a lot of applications that they ended up not closing.
Not closing. What he did, to your exact comment, which I loved what you teed up with, is he had already pre-prepared those customers for the market cycle. He had made proactive calls before the market had moved and said, hey, not because he's a genius and he's predicting the future, but just, hey, Dave, as a past customer of mine, if the market does drop in the next couple weeks, couple months, like I think it's gonna do, can I just give you the thumbs up and call you, text you, and you just tell me go, and I'll just process your deal. And so immediately, instead of having to call people and say, hey, the market's moved, I can now save you X dollars on your deal, he just got, it's time to go, and thumbs up, and he went on a rampage with his team locking loans. And I looked at that and I was like, that is such a professional. Prepared his database, was ready to go, wasn't waiting on, and as soon as the market was there, he took advantage of it, and he helped his customers. That's the point. It
was a modern mortgage advisor, and I interviewed a lot of loan officers during that window of time, and I know some of them that just closed an unprecedented amount of business.
Yeah.
They had an incredible 3-week run, but I know a whole lot more, probably 90%, that took a lot of apps but didn't lock them, and that was or they just didn't. They were like late to the game. Yeah. So guys, I have that down, by the way, as my 5th, the number 5 top opportunity for 25. And the only reason why I have it at 5th is because we don't know when we're going to get back into the refi zone. And we don't know, by the way, rate and term. Like, we are in the debt consol refi zone. There are a lot of people that need to optimize their debt, that want to optimize their debt, that don't. And I have that as number 4.
Well, and let me give somebody some encouragement, because having personally ran big origination divisions and teams, and now running marketing, the number one thing that I find as the limiter or the prohibitor in this is that people feel embarrassed if they haven't stayed in contact with their database.
Right.
And they're embarrassed if you haven't done it, and I know you haven't done it, and there's a Band-Aid that has to be ripped off if you want to achieve the success you're capable of. And I would tell everybody that right now in January, you should rip the Band-Aid off. You should call everyone in your database you can, like 5 a day, 10 a day, whatever your tolerance is, and just jump on the sword. Dave, I feel totally embarrassed I haven't called you in a year and a half. And just whatever it is you need to say, but just rip the Band-Aid off, because that is an annuity that you have earned, that you deserve. And if it's a little bit of humility to like lower yourself to say, I admit I didn't manage this well, and then just talk to them, you're going to open the door up for the rest of this year when the opportunity's here.
Well, one thing we align on is you should be calling your database every single week. There should be something at Trust Engine. We have an app, and we'll tell you every single day who in your app is most likely not just to refi, but to move up and move down. And the thing I want to push you guys to do is when you do call your database, I personally don't think you need to apologize no matter how long it's been, but I'll leave that to you. But I would just like, hey, I am calling because this is an important year, and I just want to make sure that one, you know what we think might be happening in the market, and two, that I'm prepared to help you build wealth with real estate faster and optimize your interests. You know, are you paying too much, too little for everything?
That's a great comment.
So what are your thoughts on to me the biggest opportunity for a referral based local LO is being more valuable in the move up situation. I think there's a lot of people that are eligible to move up that want to move up, but they're either paralyzed because they got to buy before they sell. And they're like, how does that work?
How do I do it?
Or they're like, they've got a 3%. And they know rates are 6%, and they don't want to go from 4 to 6.
Yeah.
And I do believe that a lot of those people are eligible, and if they had better counseling and they had a better experience, they'd be moving up.
Yeah, I mean, it starts with human connection and level of relationship. Your level of relationship was, if you're a trusted advisor, you can call people and have really authentic conversations about what could or could not happen. If you don't have that, you're going to be limited to begin with. So if you're in a relationship with somebody, you can say, hey, are you looking to move up, Dave? And maybe you'll have the connection with them where they say, you know what, I would if rates could be this. Mm-hmm. But many of the originators don't know that because they haven't formed that relationship. And that's number one, is what level of relationship do you really have with your customers? Will they tell you the truth?
Right.
Like, yes, I would love to move up if rates were in the 5s.
Right.
Apart from that knowledge, though, the next tier up is, okay, well, how do you help them move up and get a rate in the 5s or 6s? Can you do it today? How is every single builder in the world right now?
Buy downs, guys. There are creative ways to do it.
Yeah, every single builder in the world right now is offering massive buy down incentives, temporary and permanent, to customers to come in and move their property. So what are they doing? Well, they're taking some of their profit that they're putting aside and they're building out these offerings and they're marketing it and they're educating people on what's available. Every seller or buyer today should know those same skill sets, should know those same strategies, and you're the one to educate them on it. You're the one to go to market one-to-one directly to your customers and get on social media, talk about it, send it out in communication, mass email, get the knowledge out to the agents, get the knowledge out to the customers, and be that center of trust.
So what I'm hearing from you is you're advocating strongly that everyone becomes a master at creating affordability strategies, knowing rates are in the 6s. How do we come out with offers with lower interest rates?
Yeah, I mean, look, let's be honest. So
buy downs,
like a seller
temporary
today,
and permanent buy downs.
Sellers today have more equity in their house than they've ever had in the history of the United States.
Right.
Like, it's gigantic amounts of equity. Okay, well, they don't really want to move, or they do want to move, or they want to maximize their equity. I get all that. Not every seller wants to offer some of their profit to buy down the rate for the person coming in to buy their house. Everyone's situation's different, but don't make assumptions on what all their scenarios are, and just start having these authentic conversations. And you're going to find out there's huge opportunity out there that we're just not uncovering because we're not asking the right questions.
Ditto. So if you're watching this, what do you think are the top opportunities in the market today? Let's talk about first-time home buyers, because I have that as
huge.
Number 2 or 3. And by the way, guys, the only reason why I have move up as number 1 is because it's harder to do. The ability to actually make an impact in a database, the ability to actually do that is going to be more rare. And when you come to a realtor with, hey, I helped you get a listing, and it's resulting in a move-up buyer, like, that's the trifecta of value. So to me, there is enough equity, there is enough opportunity to lean into that. But guys, first-time home buyers, I mean, that is the market.
It's the market. And I've talked, how many of you out there, and just socialize this with other LOs you know, were able to talk to somebody who didn't think they could buy, and you helped them find a strategy to buy?
Right.
Like, so many loan officers anecdotally be like, oh yeah, absolutely. The Smiths, I talked to them, they didn't think they could buy, and we helped them. That's way more people than you think. And so there's this entire audience of people out there who are like, I don't think I can buy, I don't have the down payment, I don't have the credit score. Whatever their excuses and thought processes that they're going through is likely a myth you can bust. You can help them with a down payment or a low down payment option. You can help them with their credit score. Maybe their credit score is actually enough to buy. Like, there's so many assumptions that people are holding themselves back. And again, your ability to educate, inspire, bring some hope, some positivity, some motivation, some just positivity into the world is going to absolutely let you on fire with first-time home buyers.
And the takeaway from everything that we're talking about is, like, you need to be on the offense. This is not a market to be waiting for referrals. This is not a market to be waiting for someone in your database to go, hey, I've got a question. This is a market to be on the offense and to be uncovering hidden opportunities where people did not even know that they could consolidate debts. People didn't even think that they could move up right now. They have family members, they have kids. They didn't know that they could buy a duplex, or they didn't know that they could house hack. Like, if you are not creative, if you are not default offensive, I think it's going to be another like
Bumpy year.
or hope rates come down, but hope's not a strategy.
Yeah.
Let's talk about adoption. So I shifted my title to Chief Growth Officer
Yeah, that's awesome. Yeah.
with a complete laser focused loan officer adoption of not only technology, but best practices
Yeah.
above the funnel and at conversion. Like that's all about. Let's talk about that, because you've trained a lot of loan officers, you've mentored a lot of loan officers.
Yeah.
You directly now as chief marketing officer, you more build system culture to
Yeah.
do that. Why is LO adoption such a problem? Like, and then what are some of the solutions in your opinion?
Well, I'm going to say this, and it's going to come across like I'm a little bit of an ass, and I don't mean it to be that way, but sometimes a little bit of tough love is what we need. You know, before
Well, you could say it and say things I can't say. So go.
before this market correction that we're in, where rates are now up and they're in the 6s and 7s, and there's been all this and inflation and rate cuts have done nothing, and all this pain we're feeling. Before this happened, going back to 2010, there was like literally 10 to 12 years of the best mortgage cycle ever.
Right.
Ever.
Yeah.
And so 10 to 12 years is a long ass time. Many of our loan officers are like, that's been my whole career. It's been 10
When
years.
you look at interest rates for the past decade, like they were
Fantastic.
Yeah, they've been fantastic.
And then super fantastic. Incredible, never probably ever again, 2s and 3s and all that craziness. So I don't mean to sound like such a jerk, but like you haven't had to be on the offensive. You haven't had to be a great salesperson. You had to be maybe a good relationship developer, but you didn't have to know all these different strategies and ways to like.
You didn't have to uncover
You
opportunities.
didn't have to be on the offense.
Right.
You could survive really well on the defense if you were a good relationship person, met some realtors, hugs and kisses, and like didn't need to know how to solve every loan problem out there because rates were very steady and low. So now though, that's all exposed. That's all over. Rates are in the 7s. They're not going to come down. Like you can pray that they all come down. You can pray inflation comes down, and maybe we get like it all happens. But what are you going to do otherwise?
Right.
And Dave, your platform and your voice has always been one of like pushing people to be better. And to now it's not even an option. People are watching their business just erode, and then you're watching other people have amazing years. And you're like, well, why are these people having amazing years? Because they're adopting best practices, they're listening, they're learning, they're pushing, and they're being offensive in how they build their business. I don't mean like angering people. But they're going on the offense, and that is for everybody. It's almost just a moment to look up and look around and go, oh, I need to start operating a little differently.
Right.
I need to start using tech that actually explains things better than Excel spreadsheet. I need to start
Mortgage
leveraging
Coach.
technology that gives me advantages and insight into my customers so I can make really good decisions and be proactive. I need to start calling my customers, stop making assumptions, asking great questions, and turning my career around, or you're on the hope bus.
So be a local data-driven mortgage advisor. You are also very passionate about social media and having a digital presence.
Yeah.
Anything you want to bring? You know, it's 2025. Anything like that? What are you bringing to all the loan officers you serve? What's the message you're giving to the loanDepot family right now?
I'm still beating the same dead horse for a variety of reasons. I think, and I continue to say this and get a lot of nods from originators, that our business as originators is to maximize how many people know me, to from that group of people who know me, try to maximize how many people in there trust me, and then, like me, and then trust me. Mm-hmm. So you get your audience is this big, they know you, some are going to like you, and some are going to trust you. And those people that trust you are probably going to do business with you and earn their opportunity. And so marketing 101 is how do you get the know you, like you ball as big as possible. Mm-hmm. And that's all about brand awareness, social media, CRM, email blasts, like direct one-to-one communications and scalable activities on top of that push the know you out as big as humanly possible. And so for me, that's very obvious. Go hang out on these social platforms where humans are. Mm-hmm. Go be a knowledge expert on YouTube and these platforms that are education-based places that people are consuming information. Go invite and connect to your group of people, not just an email, but in places they're hanging out, like Instagram and Facebook and etc. That to me is just all opportunity, Dave. It's just all opportunity.
Yeah.
And you don't have to do any of it. You could do none of it, and it's fine. But to me, it's like it's just all free exposure and opportunity to get this know you sphere as big as possible. And then from there, if you just rip the curtain down a little bit and actually are yourself, and you don't put up the loanDepot banner, it's actually a banner of you, which I love my company. I've been there for a long time, but it's the human I want.
Yeah, it's
the
one-to-one. You're especially with social media.
Yeah, and on video, they're like, oh, can you get, like, so we have a great tool that edits videos for people, and we started it with some scripts. But one of the pieces of it is just we don't want you to be always scripted. You're always scripted. It's not you.
It doesn't come across.
You can't. I don't know very many people that can read a script and be fully authentically themselves in it. That said, the opportunity is to be fully authentically yourself, and that's where people are going to find out if they like you or not. And I always get the same argument back. I'm afraid of being vulnerable. I say something dumb. I don't know if I'm that likable. I don't know if people are going to like my face or my voice, and all these insecurities flow out. And I'm like, but that's the land of opportunity. Do you want clients to work with you that like you? How many of you worked with a client before that liked you? Was it amazing? And how many of you worked with a client that you just didn't, oil and vinegar, didn't work, and it was just painful for 30 days? You all know that experience too. So the more you're authentically yourself, the more you're going to find clients that like you, and it's just going to make your life easier.
So let's close it. First of all, if there's more things you want to go into, we'll go into it. But I want to play this out because one of the things I've always studied this loan officers databases. Yeah. But I think in this modern world, you have a database, call that your home base, and then you have all these hubs, Facebook, LinkedIn, Instagram, and they're hubs. But your database is your home base. And I'm super frustrated when I ask loan officers, what how big's your database, and they don't know. And then I'm also super frustrated with loan officers that it should be if you got in the business, first of all, I would not hire a loan officer today. I don't care if they were 22 years old that couldn't start with 300 people in a database. Who'd you go to high school with, college? I mean, we've all heard it, but you can't come here without 300. Yeah. And by your 6th month, you should have 500. Yeah. And within a year, you could have 1,000. And I think every local referral-based loan officer needs to obsess on having 1,000 people that know them, like them, trust them, and building understand the value. They're monitoring them in a database so that when it makes sense for them to call them, they're doing that. First of all, am I being too aggressive with you should have 300 and it should be a race to 1,000? What do you think the number should be that the local referral-based mortgage professionals, managers of local referral-based mortgage professionals, what should be the data count that they're focused on?
Well, let me add a comment this way. Your sphere of influence, your CRM, your database scales so fast, it's insane if you're just aware of it and paying attention to it. Like to what Dave said, 300 people, and then I'm like...
should any loan officer not have at least 300 people in their database?
Well, the loan officer that hasn't been mentored by the right leader. The person around them hasn't been let's sit down and talk about it, because and this I want to be careful though, because this ties into something that I'm not against, which I'm against, which is let's get a name of all your best friends and then call them for loans, and all the people that ask for 5 referrals of who do you know, and just start hounding people, because I don't think anyone, and that's not what David's intending. Anyone want a fake database of people that doesn't want, you get an email from you and they hate it. They're like, I don't want to talk to this person.
So you don't want that.
But what the opportunity though is how do you just become a relationship driven person?
A value, someone that's getting relationships through value.
Yeah, and this is my biggest criticism or critique of retail and in-market loan officers is they will say, I'm a relationship driven originator. And I'll go, bullshit. How many times do you call your originators after you close their loan? And then we sit there and stare at each other because they go, I don't really do that. I'm like, so you're not relational, you're transactional. You just wanted the money and you don't really care about how they're doing. Right. And it's a gut check moment. Maybe if you're sitting there being like, Alex just yelled at me personally, maybe it's a gut check moment. Do you really care about them? Are you really going to talk to them? Because if you did and you are relational, then your database becomes this absolute hub of referral opportunity. Because then when you are reaching out to people or sharing information, they're not like, oh, Dave just wants a deal from me. It's Dave's trying to bring, you said it 2 seconds ago, Dave's trying to bring value into my life to help me with things that I could be dealing with. And there's a radical difference, and it's a mindset.
Well, let me give you an idea of, first of all, the script. If you are a new loan officer here and you're starting, I do not recommend you just do that. Hey, I'm in the mortgage business now. Do you know anybody looking for a loan? By the way, better than nothing. But here's what I would do is I'd call all my renter friends, and if you're new and you're in your 20s, you probably got a lot of them, and say, hey, I need to get really good at helping people with creative strategies and overcoming the affordability challenges of going from renting versus owning. Would you mind helping me practice that conversation? And it's not for me to try to sell you on a house, but maybe you'll learn something and maybe you'll have a roadmap to win, to own. So it's practice the rent versus own. And then I'd call all my homeowner friends. Remember, they like you, they know you, they trust you, and say, hey, I'm new, I need some help. I need to get really good because right now, people that own homes and have mortgages, they're at 2%, they're at 3%, rates are high. Yep. I need to get really good at being valuable to these people and helping them, if not buy now, have a roadmap, have a real estate plan of what needs to happen. Would you help let me practice my move up? And then if you're good at having those conversations, now you're not afraid to call your database.
Absolutely.
And everybody
exactly
in your database is valuable.
That's exactly right. That's exactly right. And it's just being a human first. Being a human first, not trying to sell somebody, just engaging as an authentic person, framing it up like that, be like, hey, can I share some stuff with you? Can you give me some ideas on this? That's just you being authentically you, and that's what wins.
Right on, man. Any closing thoughts, anything you want to make sure we share before we run out of time here?
I just want to encourage everybody, and maybe you've heard this 1,000 times, but you have value to offer the people around you, your sphere, the realtors, the customers around you, your past clients. You have value to offer. So go offer it. Unsolicited, without strings attached, not trying to sneak a deal in, but just go give people information that's helpful to help them make great decisions, and don't make assumptions about what they need in their life right now. You don't know that they've racked up some debt or they had a medical issue, and you don't know what's going on. A kid just got into college, and how are they going to pay for it? Like, we don't know. But when you just reach out and you just bring solutions and you're helpful and thoughtful and you care about people, you're going to win. You're going to win more than ever in this year.
So I want to add on to that. So guys, in 2024, the average age of a first-time home buyer was 38. And the year before it was 35. And for the 3 decades prior, it was 29 to 32. Yeah. So like for 3 decades, 29 to 32, popped up to 35. Now it's 38. You got to be valuable beyond the transaction, you know. And if you just because you could close a loan, that's not good enough right now. People need you to vision cast what homeownership means over 3 years, 5 years, 10 years. So being valuable does not mean having a transaction conversation. It means caring, thinking long-term with people. Yeah. Dude, it was awesome,
Thanks
man.
for hanging with me, dude.
So hopefully you're getting value from these. This is a playlist, Thrive in 25. I'm going to do more interviews with C-suite executives, find out what they think the top opportunities are right now. So make sure you're subscribing to our YouTube channel, and hope you got value. Take care, everybody. Make sure you follow this guy on all social media, Instagram, Facebook, LinkedIn.
Harmless plug at the end.
You are valuable on social, bro. And you're funny too.